The four taxes are federal income tax, state income tax, self-employment tax, and sales tax. That's what we're going to be talking about today. Let's start with federal income tax. It's probably the one you're most familiar with. This right here is what we call tax brackets. Oh my gosh, I got this so wrong. I thought that if I earned just $1 more and got into the next bracket, all of my money would be taxed at a higher percentage. I couldn't be further from the truth. Every bracket is a bucket. That first $12,000 that you make, it's taxed at 0%. Then I fill up the next bucket, and then that bucket is taxed at that percentage. And then I fill up the next bucket, and then that bucket is taxed at that percentage. So if I spill $1 over into the next bucket, only that dollar is taxed at that rate.
Well, hold on a second. Let me explain it in a different way. There's no minimum amount of money to file taxes. So if you make $100, you've got to file taxes. If you make $100,000, you've got to file taxes. But it doesn't mean you have to pay. Here's what I mean. There's this thing called a standard deduction, and it's the same for everybody. And it's about $14,600. So let's say you made 12 grand. You file your taxes. You're expecting to pay 10%. But because of that standard deduction that everybody gets, it lowers the amount of money that you have to pay taxes on, which means you pay taxes on $0 because it's less than the standard deduction of $14,600. So here's what I want you to take away from this. Tax brackets work like buckets. Everybody has to file their taxes no matter how much money you make. But if you make less than the standard deduction amount of $14,600, it will wipe out your tax liability and you will owe $0. Okay, let's get back to this.
Now that we understand how the brackets work, what's the deal with federal income tax? Federal income tax is the big guys, the IRS. This is the federal government collecting money from you. They want a percentage of everything that you make in profit. When we file our taxes, we are showing the IRS how much money we made, and then we're showing them how much money we had to spend, and then we're showing them what's left over. They tax us on that amount that's left over. It's our job to show them the difference. It's our job to justify the deductions and the write-offs, and that's where the tax code comes into play, because you're only taxed on your profits, the money that's left over at the end of the day, the money that's in your pockets. Let's talk about the state, because the state is another entity that wants to collect taxes from you. Just like the federal government, they do the exact same thing. You file a tax return with your state. You show them how much money you made. Then you show them how much money you spent in order to make that money. And then you show them what's left over. At the end of the day, they tax you on that little bit that's left over. This is how the federal government does it. This is how the state government does it. That's why you have to write 2 checks, one to the IRS, one to the state. And every state is different. Every state has its own way of doing things. Some states have 0%. Some states like California are high, like 15%. I get raked over the coals for living here. But nonetheless, they are both filed and paid at the same time once a year, April 15th. And that leads me to the next tax, self-employment tax.
If you don't have a separate business bank account, you need to get it done. The IRS does not like it when you mix all your money together. We keep things separate by having a business bank account and a personal bank account. Now, to open a business bank account, all you'll need is your LLC paperwork and your EIN paperwork. Those 2 things will allow you to get a free business checking account with Relay. Why Relay? They're by far my favorite bank. And I have accounts with more than 11 different places. I've tried a lot because I was looking for one that fit all of the things that I needed. I needed to be able to send checks and wire transfers and ACH and open multiple accounts and deposit and connect to QuickBooks and all the stuff that we need in a banking platform. Not only that, but they're the official Profit First banking platform, and it's so much easier to manage that system. So as soon as I found these guys, I reached out and I said, hey, we've got to do something together. More people need to know about you because this is incredible. And that's why I'm making this video. So I can tell you about a banking platform that's been an absolute game changer for us. It is my primary banking platform now. I've shifted everything over to it and I couldn't be happier. And the best part is that if I need somebody, I can call them or I can email them and they'll answer me. Try doing that with one of the bigger banks. Won't work. So if you want to open up a free business checking account with Relay, click the link below, fill out the application, and within a day or so, you should be approved and you'll be good to go. Even if you already have a business bank account, it's a good idea to have a backup. So give them a shot, try them out, and see firsthand why they've become my new favorite business banking platform.
Self-employment tax. Man, this is a sleeper, and if you ask people, most won't know exactly what it is. It took me forever to figure out how this all worked, and it was hiding in plain sight. If you've ever had a paycheck and you've looked at the deductions on there, on the taxes section, and you see Social Security, and then you see Medicare, that is self-employment tax. The federal government taxes everyone's earned income. 15% for self-employment tax. And that self-employment tax is allegedly only used for Social Security and Medicare. 15%. That is a lot, and it's flat. It doesn't matter what tax bracket you're in or how much money you make. You can imagine how much that's going to hurt when you're taking hundreds of thousands of dollars out of your company every year. Now, if you're savvy, you will have noticed that the Social Security and Medicare tax on your paycheck is not 15%. It's closer to 7.5%. Why? The government has split that tax between the employer and the employee, the business and the worker. So if you're an employee, you only have to pay half, and the business will pick up the other half. That's what payroll taxes are, paying the business's portion of Social Security and Medicare tax just for having an employee. That's right. Every worker that we have on payroll pays 7.5%, and we pay 7.5%. Crazy, right? We just don't even think about it. Well, what if we don't have any employees though? What if it's just us? What if we just simply take owner's draws and transfer money from the business account to our personal account? We're not on payroll. We don't have to pay it, right? I wish that was true. They get you come tax time. They look at all the money that you made and they're like, oh, wow, you made some profits. 15%. You're paying both because you're the employer and the employee. Gotcha. It's awful. It's awful. And so when you're working for yourself, doing all the jobs, busting your butt, trying to get ahead, the government taxes you more. More than somebody that isn't taking the risk, more than somebody that hasn't put up the capital, more than somebody who isn't spending 15 hours a day grinding on this business while raising a family and trying to be the best parent possible. They tax you harder than the employee. But there is a way out. And that way out, you guessed it, it's an S-Corp. When you are an LLC taxed as an S-Corp, you put yourself on payroll. In fact, you can't put yourself on payroll unless you are an S-Corp. But a funny thing happens when you do that. When you change your tax status to S-Corp, you become a small business in the eyes of the IRS. On your paycheck, pay 7.5%. You're an employee. Well, the business still has to pay 7.5% on the other part of the money they pay you in a paycheck. But that's not where the savings comes in. The real savings comes in from one specific S-Corp rule. And that's that distributions are no longer subject to self-employment tax. That's right. So as long as you have yourself on payroll and you're paying yourself a reasonable salary with your S-Corp, you can transfer as much money as you want from your business account to your personal account, and you won't pay any self-employment tax. Any. You're still going to pay state income tax and federal income tax and sales tax, but not that 15% self-employment tax. And that's how S-Corps save you 15% like that. Let's talk about sales tax. Sales tax is by far the most savage, the hardest to deal with, and by far the most complicated. Every county, every city, and every state wants a piece. They all want a piece of the money that's leaving their township. They don't want the money to go out of their microeconomy without getting some back in return or having you pay your dues to get it. So they charge sales tax. Every sale that happens, they get a piece, and the buyer has to pay it. Some places, it's 0%. Some places, it's close to 10%. Sales tax is typically used for things like roads and schools and infrastructure and police and fire, allegedly. Regardless, they still collect it. Sales tax has a completely different filing and paying process. And we don't know what the rules are until we know exactly where we're paying the sales tax. Think of it like this. Every single state has its own sales tax permit. You have to register with that state to get a sales tax permit, and that permit allows you to make transactions in that state. It also gives you a unique number and a login, a history with them, so you can file and pay your taxes properly. Doesn't that sound terrifying? You're probably sitting over here like I am, like, oh my God, do I have to go register in every state? You don't, don't worry, I'm gonna explain. But that's how it works. As you get big enough, you will. These 8-9-figure brands that are selling into all 50 states, they pay sales tax and have a whole team to manage this process for them. You don't need to worry about it right now. I'll explain. There's this thing called a nexus. Physical nexus, economic nexus. A nexus is kind of like a triggering event. A nexus happens when you are significant enough for the state to say, hey, you've got to start paying us. Now, the only place you have to worry about in the beginning is the state that you're operating in. If your business is in California like I am, and I also live in California, I've only got to worry about a California reseller's permit because California says, hey, there's a lot of money flowing from our people to your business. We want a piece, the piece that we are owed. So register for your tax permit, document everything, file, and pay us every year, please, in July. Like, okay, cool, I got it. But then you might be asking yourself, when do I have to pay in other states? And that's where the nexus rule comes into play. Typically, if I sell something to someone in Nevada across state lines, they don't have to pay sales tax, I don't have to worry about it. But if you do it enough, and if you have enough stuff across state lines, you're going to trigger either an economic or a physical nexus. Economic nexus means that you've done more than $100,000 in sales or more than 200 orders. A physical nexus means you have a warehouse, you're storing product, you have employees that are on payroll, or you have any other type of infrastructure that's physically in the space of that state for regular business activities. There are a lot of different rules around this, and every state kind of looks at things differently. But the thing that I need you to remember is that you don't need to worry about it until you're doing more than $1 million a year. Here's why. Before $1 million a year, it's unrealistic for us to sell $100,000 worth of product into another state, even 200 orders. I didn't start triggering economic nexuses until we were $1.5 million, and then, even then we only triggered about 4 of them. We had some physical nexuses too, and I've learned how to manage all of this, but pre-7 figures, we're small fries, man. We're small fish, they don't care. So I wouldn't waste our time worrying about it. All it does is take money out of our pocket and take time away from our day. No benefit to us. It only benefits them. So I wouldn't worry about it until you get to 7 figures. And when you do, you'll have the money to solve the problem and I can guide you. I got your back on that. Until then, just focus on your state. You might be asking, well, what about Amazon? Because my product's in a lot of warehouses all across the country. How does that work? What about Etsy? What about eBay? Because I'm selling in all these states, I don't really know how to track it. Like, this is getting complicated. Oh my gosh, yes, you are right. And some states take it very seriously. However, the federal government has stated that third-party marketplaces, they are responsible for collecting and paying sales tax on your behalf. That's it, full stop. So if you're selling on Amazon or eBay or Etsy, you don't have to worry about it. Sales tax applies to Shopify sellers, to physical goods that you can hand to somebody. It doesn't even apply to services. We only need to worry about sales tax if we are over 7 figures and primarily selling on Shopify. And even then, we only really need to worry about the sales tax in our state. Please just register for a sales tax permit in your state anyway. In California, it's the CDTFA, the California Department of Tax and Fee Administration. In other states, it's something similar, but different names. Register, be compliant, do your thing. Get familiar with the process, but don't lose any sleep over it because it's not that big of a deal. Now that we've talked about the different types of taxes, how they work, entities and tax classes, let's talk a little bit more about filing our taxes. I want to talk about how I prepare. Because I mentioned write-offs and deductions earlier, I mentioned record keeping. Let's go into that really quick. What do you think happens when I pay an invoice via email with the little green button that pops up with a credit card? What do you think happens when I'm buying something on Amazon or if I'm getting a receipt from something at the store? I document it. What does document mean? I save it. I like to save things digitally. I think it's smarter. So I will take a picture of the receipt, put it into Google Drive, and I am done. When I get emailed the invoice, I'll save a copy, drag it into Google Drive, and I am done. I don't worry about it. If you want to get fancy, take pictures of everything with your accounting app like QuickBooks. It will categorize and automatically do all this really cool, crazy stuff. It's amazing. But if you intend to spend business money on a business expense, it better be legit. Here's how you know if it's legit. Is the thing you are going to spend money on regular and ordinary for your business? Is this something that someone else would also spend money on if they had your same type of business? Is this something you regularly have to purchase? If so, great. Go ahead and use the business account for it. If it is not, if it's more of a personal expense, spend personal money on it. This is how we keep things separated. This is how we follow the rules and keep the IRS happy. Okay, well, most things that we're spending business money on are business expenses. I trust you. You know, you get this. You are intuitive and you understand, and I know you're going to make good decisions. So when we do decide to spend business money on a business expense, how do we document it and what's important to have? We have what I like to call the 6 P's of proper tax deduction. If you have these 6 things, you can write it off, provided it is a legitimate business expense. You need to know the place that the transaction took place. You need to know the point in time that it happened. You need to have the itemized amount of what everything costs so that you can see what money was spent on. You need present documentation, receipt, invoice, etc. You need to know the person that spent it. And lastly, the purpose. What was it for? If you have these things, you can write it off. That's why you'll see people at restaurants writing off business meals. They'll write business lunch with Bob and Karen on the itemized copy of the receipt. They'll snap a picture or keep the receipt and save it. And that's it. That's how you document your write-offs. Proper documentation of your write-offs are going to move the needle. This is important. This can't be skipped. If you can't prove that any of the money was spent on business expenses, guess what? You're paying taxes on it. Because the IRS isn't going to believe you. They're going to say, oh no, you for sure kept it. If you can't prove that you spent it on this, like, you're paying taxes on it, man, you kept it. That's why documentation is so important. That's why keeping our invoices and our receipts is so important. That's why good bookkeeping is so important, because it helps us save money so we can prove to the government how much we spent and how much we have left over. If we know those numbers down to a T, we're good. And if we have all of our documentation backed up and saved on a computer and in a Google Drive, we don't have to even worry about an audit. We're safe. All right, we talked about write-offs. Let's talk about preparing for our taxes, because throughout the year, you're going to get pieces of paper in the mail and you're going to get them emailed to you. Please set up a tax folder in Google Drive or on your desktop so you can save all this stuff. When someone emails you something, take a picture, send it to yourself, put it in the folder. If you are diligent throughout the year, tax time is a breeze. I'm talking about your 1095s or your health insurance statements, any W-9s or 1099s that you've gotten, mortgage interest statements, bank statements, dividends, all your investment information. Put it all in a folder. That's like the biggest piece of advice I can give you. If you stay organized, it's so much easier. So when that time comes, around January of every year, I start gathering all the information and filling out all the forms that my accountant needs me to fill out. And by early March, I'm already looking at my tax return, completed, already done. But in order to get there, they need information. They need to know how much money we made and how much money we spent. That's where financial statements come into play. Remember how I mentioned you need a bookkeeper? You need someone to keep track of the money in and out? This is where it comes into play. By getting a profit and loss every single month, you'll know exactly how much money you're making. And those reports can be printed out for any time frame. That's the report that your tax preparer is going to use to file your business taxes. It's so important that this is done well, because it will literally translate to how much money you make. It will determine how much you pay the feds and how much you pay the state. It will also determine your self-employment tax. So I keep it simple, a folder with all my deductions. I communicate quarterly with my tax preparer, Steven, so I can make sure that I'm doing things properly and paying myself at the right time for these special rules that we have, like the Augusta rule. And when I want to move money or take a large distribution, we'll talk about it. We communicate so they can document with journal entries and they can keep my books tight, because tight books will allow you to do cool things like save money on taxes, like get a mortgage and an SBA loan. All of these things I've done with my business financials because they're tight. Okay, so when it comes time for taxes and the filing is submitted, what happens next? Well, then I pay. I write them a check. Now, I typically don't write checks and mail them in because they're so easy to get lost. I'm a little wary of that. I pay online. If you look at this graphic, you'll see exactly where you can pay your federal income tax at. You'll also see a couple of different dates. Now, if you're anything like me, you're probably like, hey, this says quarterly. What's up with that? You just said that you pay them once a year. Yes, you are correct. I pay the penalty for paying once a year. If you owe more than $1,000 a year, you are required to pay your taxes quarterly. And it's not even really paying your taxes, you're prepaying. You're taking last year's amount and dividing it by 4 and paying that every quarter. You see, humans and business owners especially, the government knows that we are really bad at setting aside money to pay our taxes. So they require us to give us chunks throughout the year so it's not so bad at the end of the year. The amount of people that were like, I don't have that money, like it's all spent. Yeah, but you owe us, we're the government. Sorry, I don't have it. It probably happened a lot. So now they require you put in money every quarter, prepayments on quarterly taxes. That way, when you file at the end of the year, you settle up. If you owe more, you'll have to pay them more. But if you paid too much and you made less money this year or you have more deductions, they'll give you a refund. And that's how businesses can get refunds. Please pay the state online and the federal government online before April 15th of every single year. Very important to do that. We do not want to be late on these payments. But if you don't have the money, that's okay. That's okay. It's not illegal to not pay. It's illegal to not file. So we've got to file. And the good news is that after we file, we can go on a payment plan if we don't have the money, and they can break the payments up for you. Very small interest penalty on there, but it can make things totally manageable and get you out of hot water. It's really important that we get current on our taxes, because when we do, it unlocks things for us. Doors can open. When we have current 2 years of taxes, we can get a mortgage, we can get an SBA loan, we can get a line of credit, we can get all kinds of cool stuff for our business that we normally wouldn't be able to if we didn't have current taxes, if our books weren't tight with good financials. Now, there are 2 other things that really help this process go smoothly. The first is Profit First accounting. God, I love Profit First. If you haven't learned about it or implemented it, please consider it. It comes directly from Mike McAllowitz. It's his system. But what it does is it forces you to set aside money for taxes so your business pays them for you. I've never not had money for taxes because I use the Profit First system. It has saved my butt. And honestly, it feels good when your business pays it and your personal account doesn't take a hit. The second thing is working with a tax professional who gets it. Someone who understands S-Corps, someone who understands small business and products, and people that are making, 6, 7, 8 figures a year. People that aren't just W-2 employee tax people. People that understand the tax code, that know what Tom Wheelwright and Robert Kiyosaki talk about. They get it. They can do cost segregations, and they understand the value of real estate and the Augusta rule, all kinds of stuff that they should know if they're a real tax professional. Those 2 things alone have been huge value adds. Let me give you some takeaways so we can kind of sum up what we've talked about, because we've gone over a lot. Here's how it works. Form an LLC, get an EIN for that LLC, and then use those 2 things to open up a business bank account. Once you have a business bank account, start putting all of your business earnings into that account. If it's a business expense, spend business money. If it's a personal expense, transfer money from the business account to your personal account first, then spend money on it. Document your receipts and keep track of all your documents all year long. Save your invoices, save your receipts, save your statements, keep everything organized. It will make your life so much easier. Keep track of your money in and money out by using a bookkeeper. Find one that you like, someone that you're willing to communicate with on a monthly basis, because you will be work married. And then try to find yourself a good accountant, a good CPA. It will take time, but it's work that needs to be done. You've got to find the right person to help you with this, or you need to learn it. I recommend finding the right person. Don't worry about S-Corps until you're making more than $100,000 a year in profit. They just aren't worth your time until then. They won't save you enough money to make it worth it. Make sure you are getting and looking at your monthly profit and loss reports. You need to know how much money is coming in and how much money is going out. You need to know how much money you are making. Register for a sales tax permit in the state that you're doing business in. Make sure you follow their rules. File and pay your sales tax according to state wishes. They're all different. Please look it up. Same goes for state income tax. Now, your CPA, your tax guy, will have your back on this. Just make sure you follow some of the nuanced rules there. Prepay your taxes every quarter online to the federal government. If you decide that you want to pay them all in one chunk once a year, please make sure you're setting aside money. And also, know that there will be a penalty attached to it, and you'll have to pay a little bit extra. It's a few percent. File your taxes anytime between January 15th and April 15th. I recommend you get them done earlier, but that is the deadline for tax time. And lastly, please continue to educate yourself. When I started getting educated, it blew my mind and changed my life. The exact same thing can happen for you. I just want to encourage you to continue learning, doing research, reading, and going down this path, because there are infinite levels that you can take it to. And the more you know, the more you can skill stack.